we have different institutions here on the panel. And we mix these institutions very carefully, because we have important European institutions, we have important global institutions, but also important stakeholders into the market. I will ask them how they face the challenges of the energy agenda, what they are doing, what is their role, and if possibly, of course, if they want to give an opinion of what we are doing here, it's welcome. And I will ask the banks to tell clearly what they need from these people. Because only matching the wish of list of these people on this panel, we can move forward. As you have seen before the coffee break, we are ready to do. We are doing a lot of homeworks. But I would like to start with the European institution that we have on the panel. Maybe, Marguerite, I mean, what's going on in Luxembourg? I mean, if you can help us, how the EIB is facing the challenge. What is your role together with the European Commission? How are you linking with this kind of huge pressure coming from Brussels down to Luxembourg to support this agenda?
Thank you, and thank you for the invitation to speak here today. If there's anyone in the room who doesn't know who the EIB is, we're a publicly held bank owned by the 28 member states. We're located in Luxembourg. We raise our finance on the capital markets, and we were the first issuer of green bonds. And also, our green bonds incorporate the definition of projects. So maybe if I jump a lot of the things that I'd prepared for today, I may say, what are the main challenges facing us? The EIB doesn't lend mortgages, so we don't have a pile of green mortgages to put into a bond to sell it on the market. We finance projects. We finance projects that improves the lives of citizens in Europe and basically around the planet in different areas. We support projects for energy efficiency, improving infrastructure, small companies, and innovation. Those key policy areas have aspects of climate action. So how do we define this climate action? We have a team of technical people, engineers and economists, who have defined I'm on the lending side, first of all, make that important, who have defined these criteria, which sometimes we said, well, they're a little bit limited, because what we have been doing since the start of 2017 in particular is talking with the commercial banks around Europe to see how we can increase the component of eligible climate action projects in the loans that we do with banks. These are called multi-beneficiary loans. They're for smaller projects up to 25 million cost. It is challenging because a lot of the criteria are for sustainable transport, many of the things done by the public sector, but the banks finance also the private sector. So what we're looking at also is how we can do this energy efficiency, for example, not just in commercial buildings, but also in we call it the tourism sector, which could be hotels, can be restaurants, and also in housing. The bank has financed housing for many years, but mostly the financing has been to public housing, through banks or through regions. So there's some interesting projects done. We also had an interesting project, which was the first targeting the private sector. It was in France in 2015 for energy efficiencies and investments by private housing. This was to basically special purpose vehicles around France, and it was combined with the objectives of the French government to finance at least 500,000 homes per year. On energy efficiency represents about 3 billion of the 73 billion we lend each year. And of that, 75% is in buildings. I think that's an interesting thing. It's something that we're already doing. What are the barriers to developing this or to delivering this energy efficiency? Many of them have been said before. A lot of it is the fragmentation of the projects. Also, it's the capacity of the beneficiaries, that the householders or even the housing corporations to define and manage the project. So that's why one of the aspects that is important is technical assistance and the correct technical definition of what these projects are. We lend, as I said, through commercial banks to the smaller projects, but we also lend directly to larger projects. And one of the European mechanisms or initiatives which is also helping us increase our lending is the Juncker Plan, FC. We have lent to one project, an interesting project in Helsinki under Juncker Plan, which we call it SATO, and it's a combination of new build, zero energy buildings, and very deep refurbishment of existing buildings. Technical advice is also possible from the European Investment Bank under our normal activities and also under the Juncker Plan.
Can I, Marguerite, I mean, we see also, in order to put the mechanism in place, I mean, we understand that the EIB is already intervening, the ammunitions are there. We need to channel this ammunition in the right sector. I would like to give the floor to Ilaria. I think that the technical competence that you are doing are the background. We need to channel finance and the language problem that we were discussing. We need to have technical competence at the national level. I think that the Italian Agency for Innovation and Energy is doing a huge work in trying to do the background work, creating the right competence. Ilaria, can you explain to us what you are doing in Italy to create a background to use the ammunition provided by the European level?
Yes, good evening, and I want to thank Luca for the invitation, ENEA, which is play also the role of a national agency for energy efficiency. So is strongly involved in the teams of energy efficiency of the country. We consider the initiative, so EeMAP, very interesting. In fact, we can give a great boost to the promotion of energy recovery of buildings that are responsible of energy consumption. And this idea of creating, we think that the idea to create synergies between different funding mechanisms for household financing is extremely winning and encourages citizens to undertake a virtuous path towards an energy awareness. ENEA, in fact, operates since its establishment to the mechanism of the tax deduction. That is a very important measure to reduce the energy consumption. In 7 years in Italy, our result has 2.5 million of application. That means that citizens and families have invested about 28 billion euros. So in different kind of intervention that are about home automation system, winter and summer air conditioning, but also in the envelope of the building and so on. So I think that we want to work with this initiative because we think that it's possible together to overcome the difficulties that, for example, in Italy there is for the construction sector, because there are very deep crises in the building sector, and such action can be represented and tools to solve such crises. For example, to provide the opportunity of new jobs in terms of number, but also in typology. of new type of jobs. For example, before I heard about the valuers, the mechanism needs different kind of valuers of building, of apartment, that are very more professionally qualified. So the ENEA can help you and the organization to fulfill this goal.
Thank you, Ilaria. I would like to bridge this financial aspect with the technical details, with the political debate. Monica, I would like to come to you. In Brussels, Monica was an MEP for two sides. You represent two different countries, yes. Belgium and Italy. But I mean, the political debate about the energy discussion in Brussels is really the right moment. Yes. I mean, if you come to Brussels, you cannot come back from Brussels without speaking about energy efficiency, whatever meeting, from the fish till the mortgage business. Can you give us a sense of this political debate in Brussels?
Yeah. Thank you very much, Luca, and thank you very much for the invitation. I'm really very happy to be here. I would say that perhaps one of the reasons of that situation is because, unfortunately, there is not much more legislation going on. So perhaps is also because of that the European Union and the Commission in particular perhaps lost a little bit of its drive of making new laws, and now indeed energy is the one that is the most important one. I just wanted, before answering your question, I would like just to start with saying that I was particularly interested and thrilled to hear talking about art, emotion, and the fact of having a positive contamination between different actors, energy efficiency and banking, because I think that this is really key. All these elements are part of an agenda which is not only financial and it's not only political, but it is also very much driven by the willingness of creating and of facilitating a revolution, as it was said before. And this revolution is actually not yet there. So I think I would like to give two messages today. The first is that it is very important that this contamination between legislation, financing, and also public sentiment and public support of this agenda are visible and are actually made efficient. Because in this moment, every time that you go to a policymaker talking about, for example, how great energy efficiency can be, also for business, the first time he or she says is too expensive. Yeah. So this element of the cost is an element which is really huge. And so the responsibility of the financial sector to say, hey, that's not the point, yeah, is very, very big. So I think that that element of the contamination is important, and that is why I'm here today to say that this initiative is exactly what we need. Because this initiative puts together the need of changing the world in a way and of adapting to a reality of climate change, to the urgency of dealing with it. And by the way, I want to make a parenthesis. I have the impression, I don't know if some of you share it, that after the agreement in Paris, there is a feeling of self-happiness that is somehow resulted in some kind of relaxing. Okay, yeah, okay, we signed the Paris Agreement, we are going towards that, but okay, we did most of it. And indeed, I don't see the sense of urgency that Sean was talking about, even among those who in reality should foster it. So that's why I really think that these kind of instruments are very important for that. But this, I believe that if you don't have, and this is my second message, if you don't have a good legislation coming out from the current legislative process on the Clean Energy for All package, and notably on energy efficiency and on the EPBD, I guess you spoke about it earlier, I think that we are going to miss a huge occasion, and people like you or like other people working on green finances will not find the enough motivation and enough strength to actually beat other priorities. And I wanted to underline the fact that in this moment, investments and subsidies, both private and public, on fossil fuels, including from the EIB, I'm afraid, are bigger than the ones on renewables and on energy efficiency. And so I believe that this is not a detail. We are not living in a happy place where everybody's going in the right direction. It is still a place where we have to fight. And so what I am advocating is that the financial sector, let's say, is helping us or should help us in making this legislation work. That is why, for example, when I go to talk, and I finish here, when I go to speak with MEPs, notably from Italy, I always speak about this initiative because I think it's very important. Or I always speak about the report that Peter Swinman coordinated some time ago, because this element of financing cannot be an excuse to do nothing. And I think that perhaps we also need a little bit of support from your side to help us with the binding targets, with the right majorities, with the fact that both national and European level legislation is needed in order to get your life as green financing supporters easier.
Thank you, Monica. On behalf of the consortium, I would like to thank for your personal support. We know that you are a backbone of our initiative in Brussels, and thank you very much for the respect and the esteem to this initiative. Let me look for some other ammunition that we have in Europe. Let's go back to Luxembourg, lovely little place, and let me try to see another important European institution who is providing support and trust in the market. Because trust is an element of development of this initiative. We need to find trust somewhere, because banks, they don't trust politicians, politicians don't trust banks, citizens don't trust both. So, I mean, we have a problem of trust. I mean, maybe some kind of intervention or some kind of, what will be your view, and what are the activities of the European Investment Fund in the energy agenda,
I hope you didn't give me the huge task of restoring trust. I mean, that is a little bit beyond my remit, I must say. But first of all, thank you very much for the invitation, and thank you very much for this initiative. I think we are also very supportive of this push. Because just as a very brief introduction, because I understand there are no biographies, I've been working in energy efficiency for the last 15 years. I see many familiar faces. I've been hopping around the private sector and the public sector. And I'm myself still chairman of a couple of European energy efficiency funds who are also working in Italy, but also in Europe. So for the energy efficiency agenda and why are there so few projects around, I think, and Peter has done excellent work on this in the past, it's a little bit, if you look at energy efficiency, the paradox is that it is quite a quick buck earned back. I mean, you invest, and after 5, 6 years, 7 years, you have a payback on this. So why hasn't it happened, actually? If you then fragment the market, and Peter has done much better than I stand to be corrected, of course, but you see that the corporates, I mean, the guys that are looking at the baseline, at the P&L, at the costs, they've all done it. I mean, they're all up to scratch on it, they've all gone for it. But when you see in Europe, where it has not been done is on the housing market. So the housing market and the public stock, so the public buildings that governments own, there's not a lot been done. And why is that actually? I mean, first of all, probably on the public, we are now in a crisis. There is a restraint on what debt we can do. You have to choose between a school or between a new hospital or refurbishing old buildings. So what do you do as a politician? Same thing on housing. What we have is that the problem that we have with housing is that in Europe, there are different models of housing. There are private houses, there are public-private houses. Who owns the block of the buildings? How are you going to do this? How are you engaged as a bank, as a financier with that market? And so I very much welcome the public push for this market and opening this market. We cannot ask the banks or the private players to do that. They need to see a market opportunity and they will jump into that market opportunity. So the more regulation is being put in place for new buildings, the more this market will grow. The more regulation that is put in place for older buildings and refurbishment, the more the market will grow. And then the question is, why are the banks not moving into that bracket massively? And I have my own analysis, having worked in a bank myself, etc. Probably it's not easy to go with very small loans to your credit committee and try to convince them to jump into this fantastic deal with etc., etc. So the problem is probably the fragmentation. I think it was mentioned earlier. You need to be able to scale this thing. You need to be able to offer big brackets of projects or investments that you can go forward, etc. The second thing probably is that during the crisis, the regulatory restrictions on banks have been tightened a little bit, if I may say. So the banks have capital constraints, some countries more than other ones. So what can we do there as a public institution? And then if you look at the European Investment Fund, what we think we could do to help you banks to actually jump in that market opportunity, a part of the green bonds that were mentioned earlier, is actually help you in that capital constrained business. So the European Investment Fund is a AAA institution. It is owned by public and private, and its main business is actually providing equity, which is less relevant for this session, but it is also providing guarantees. So we provide AAA guarantees to banks. We think that for the energy efficiency market, a part of the big projects, which our cousins, the EIB, can deal with, but for the smaller markets, we need actually outlets, and the best outlets in Europe are the banks. You know these clients, you know these people, you have this kind of mortgages in place. So what we are offering from your side, and in cooperation with the European Commission, is instruments that guarantee part of your portfolio. So we have different instruments in place that we can provide to you. These are guaranteed products. So we help you on your balance sheet to reduce the risk weighting of those assets and try to incentivize you that it makes sense for you to do that business. That doesn't take away that the project structuring and getting the projects off the ground still needs to be done. So there is somebody, another player that needs to play that. But for you, on the balance sheet, that is where we are open for business. We are working with the Commission on specific instruments. The name doesn't matter. The latest one is called Smart Financing for Smart Buildings, I think. We all get very smart. Which is actually basically a capped or an uncapped guarantee. Very briefly, technically, because there's a wide audience of banks, is what we could do is we can provide you, and that depends, of course, on the regulatory regimes in specific countries, but we can provide a guarantee that takes the first loss of the hits, or we can provide a guarantee that does a pari passu 50% of the hits on your energy efficiency portfolio. With that product, we think we would help the banks to take that exposure on board, and that is the limited product offering we would like to offer to the public here. If you want more details of that, I think you have all the contact details you want, I think. Otherwise, I leave some business cards, and I'm more than happy to provide you more information on this and the contact persons within the EIF to roll out that product.
Well, I think that I won a fantastic train trip to Luxembourg very soon, and we will come in force to you. I mean, Peter, thank you very much. I mean, this is really music for us. I mean, before giving the floor to the other two institutions, I would like to move to the banks. I mean, your intervention, Peter, I think is very instrumental. We had a long discussion with our banks. We tried to convince them to be on board, and there are very fair reasons why banks are have difficulties in jumping, at least alone. So we have to create a kind of wave of banks that will jump on this adventure altogether to create the critical mass that you were referring to. France on Italy. I will let the ladies decide. I mean, I would like to have the intervention, maybe a big national champion, BNP Paribas or UniCredit, with an international activities, because this project wants to be also a cross-border solution. We want to create a cross-border solution for the mortgage market. So, and your banks are very active in different markets with different characteristics, with different solvency law, with different energy rules. So I don't know if I can ask you to give the floor. I'll let you decide who goes first.
Okay. Thank you very much, Luca. I think I'm happy to share with you the view of our bank and to explain you why we are so interested in this initiative in trying to find a concrete solution to energy efficiency in Europe. As a pan-European commercial bank, we are very obviously focused on the well-being of the communities in which we operate. We are very focused in trying to promote best market practices, and we feel that we have a sense of responsibility towards the societies like the other banks operating in Europe, mainly for two reasons. One is the financing of the real economy, which is obviously of paramount importance in Europe, has always been the case, but nowadays it is even more under current market conditions, as well as the focus on environmental conservation. As UniCredit, we are active in both these two fields. In terms of financing to the real economy, we are one of the largest lenders in Europe. We have 25 million of clients. On energy efficiency and energy renewable sources, we are pretty active. Just to drop you a number, at the end of 2016, our exposure towards renewable energy sources was in excess of 9 billion. So we feel that this is our mission, and this is obviously the mission of the financial banking system in Europe, rather than financial banking system in Europe. However, under current market conditions, it's becoming much more difficult to continue to play this role. Regulation has become much more, the regulatory frameworks is much better than a few years ago. Banks are much better capitalized. However, regulation is still a constraint under several perspectives. Banks were in the position to decide which activities to pursue in the last few years. And when I think at our bank, in every decision that we're going to take when thinking at new financial opportunities and initiatives, we always think at regulatory uncertainty and the regulatory framework. This is even true also nowadays after a few years of new regulation coming into place. So the right balance between the regulation and the ability of banks to support the real economy is very, very important. And from that perspective, we appreciate all the efforts made so far by the European Commission in order to promote initiatives to foster financing to the real economy, like, for example, the Capital Markets Union. We appreciate also that in the mid-term review of the Capital Markets Union published yesterday, there is a clear reference to the intention of the Commission to strengthen their leadership on sustainable investments. We are pretty active already in the capital markets. We are one of, we have, like other banks in Europe, a leadership position. Also on sustainable investment. We have been talking about green bonds. We were the lead manager of the first transaction of the EIB back in 2007, and we continue to be very active on the market. In 2016, for example, we participated as a joint book runner or joint lead manager in 10 transactions for a total placement in excess of 7 billion. So we are really present, and we are very keen to move forward also in a new initiative. When thinking at the energy efficiency mortgages, we see that although we see that there is in general an increase in demand for green products, market players need an incentive to cope with the fragmentation of the market, to create a liquid standard, a liquid product in the market. That's why at the beginning of our journey within this initiative, we discussed the possibility to have a different capital treatment for this type of product, obviously if this is justified by the underlying credit quality. Incentives can be different, obviously. This was one of the examples, but I'm really glad that now we are thinking and together speaking the same language about ammunition and incentives, because I think that this is really a key aspect for the success of the initiative.
Thank you, Micol. And from BNP Paribas, on the other side of the Alps.
Thank you, Luca. So we're on the other side, but we share obviously a lot of similarities. So at BNP Paribas, we are across the value chain. So obviously we do the mortgage lending. We finance ourselves in a covered bond and a green bond market, and then we advise clients that will issue green bonds and covered bonds. So basically we see the whole chain, and where we see a lot of value in these initiatives, I'll start by the end of the chain actually. You've heard it again a lot today. The key question is, how can we mobilize private finance to help with the energy transition? And Sean has brilliantly shown it again. Green bond so far has been a brilliant tool. It's still a small side of the market. And the key question is, how do you grow it? And talking to issuers and investors all the time, it always boils down to two questions. For issuers is, where is the price differentiation? So you can see it to some extent at the moment in some cases. It's more technical, supply-demand imbalances very often. What we need now is to think, how do we get a fundamental justification for a difference in prices, because then that's sustainable difference in pricing if we can change the fundamentals. And here, this initiative is very specific. We focus on one instrument, covered bond, that has access directly to the asset pool, and we focus on one asset. So I know, if we've heard all the discussion this afternoon, we start thinking, okay, it's one asset is building, it's very different if you look at commercial, residential, and so on. But still, it's very focused versus all the type of assets you can look at for a green bond. So looking at one instrument, one asset, I think we have most chances of succeeding. Now, there are two elements we need to look at for success. One, define comparability. And for investors, that's the key point. When they look at it, for them, it's not so much pricing. Today, they tell you same risk, same price, so I'm happy with that. But if you want me to invest more, I need to be able to compare the bonds that come through quite easily. And from that perspective, we need to be able to define what is a green building, hence what is a green mortgage, and hence what is a green covered bond. And if we manage to agree between all parties and have a widely accepted standard, which means all the banks, the valuers, everybody we've heard today, and something that investors will want to invest it as a green covered bond, then we have one piece of the element. The second, as Micol was highlighting again, is if we want banks to promote that, that financing, even more, then we need a better capital treatment for that mortgage. And if you have that, then you can then ask for better capital treatment in covered bond and get more investor base and a larger investor base in that sphere. And we know, by the way, that dedicated green bond funds that are being set up, such as the name that Shan was mentioning, most of them can already invest in green covered bonds. I mean, covered bonds are part of the instruments they will look at. So demand is there. It's just a matter of exponentially growing it. And just on the last point on why don't banks do more green mortgages? The key answer I get most of the time is that actually we don't see really an end demand. So, people that want a mortgage, they just want a mortgage. They actually don't really kind of look further. And guess what? Usually if you offer better pricing, people will want that mortgage usually.
Thank you, Agnès. That was the vision of two national champions, big banks that can create critical mass and can bring liquidity to the market. But in Europe, I say that we have 8,000 banks. Most of them are medium-sized banks, small banks, Sparkassen, savings banks. And let's jump again on the other side of the Alps. Let's go to Bozen, to Bolzano, and ask the view of a middle-sized bank, very active on their popular network. Martin, what is the view of Volksbank Bozen? You have also the Klimacasa in Südtirol, in Trentino Alto Adige. I mean, what is the challenge for an institution like Volksbank?
Thanks, Luca, for having us. Yeah, probably the smallest bank here today, only 10 yards of balance sheet. Still, as you mentioned, I think largest relatively to the mortgage market in Europe, largest lenders relatively to their balance sheet are the tier 2 banks, the so-called less significant banks. Because if you look at BNL's or UniCredit's balance sheet, the retail mortgage percentage relative to balance sheet is relatively small. If you look at specialized banks as Bodus, Berlin Hüb, or if our bank, it's relatively big, so it's about 50% of the book. And then if you live in a region that has probably one of the highest percentages of new dwellings in the A and B standard, in public and in retail, it only comes natural for us, let's say, to participate in this. So first, as I think we will have a really interesting data sample for you guys to share, even if it's a smaller data sample, but I think it's one of a region that has these high percentages, and it's also a region that has relatively low PDs. So in that respect, I think we should at least have one data point that helps to get European Commission in terms of CRR, but also European Investment Fund, and I'm glad for your comment earlier, to actually come up with a interesting pricing also of that guarantee, which is obviously due to aided by low PDs, and I think this matching or this crossing of PDs and EPCs is, I think, crucial anyway for the success. Having said that, I think it's also for smaller banks that the incentive of the EAF and also then for CAR is actually bigger than for the bigger banks, because we are all under 30 billion, we are all in standardized approach. So we have to do, but even if we have, let's say, and I dare say we have probably one of the highest performing German standard almost in the region mortgage books. We have to put, let's say, 35% risk weight to that. Whereas if I would be, let's say, a tier 1 bank, same book, I get away with the 10% like our Scandinavian friends on average. So this is something that is definitely helping the smaller ones. And I think what you want is also depth, and also get the rural areas and not only the cities in this initiative. So I think that's also another reason. So actually two reasons. One is a regulatory incentive that could help, and especially the smaller ones that are in a standardized approach. And I think we have to wait again longer for the new standardized approach in Basel IV, as it seems. You're much closer to that than we are. But what I hear is that that's going to take a long time. So 50% pari passu is definitely freeing up some capital on those books. I think that's a heavy incentive. We have to discuss, like with everything with EF, how much of that gain you would have, let's say, to then share with the actual mortgagee, obviously, as always. But I think that's definitely needed. Having said that, liquidity, as I said, as the colleagues earlier said, is not really the big issue, but capital still is, and not every bank has the luxury of as for example, as UniCredit or BNL that has done the whole exercise already and has tier 1 ratios. There is still lots of other banks, also in north and east of Italy, that are currently struggling with that, and I think that's they have to do their homework. Everyone needs to do their homework, but that's for mortgage, that's a clear boost. So, yeah.
Thank you, Martin. Peter, you wanted to react, I think, to...
No, perhaps I'm repeating myself, but what I see is a little bit, I mean, there are, for me, 3 parts. The regulatory part, I mean, create that market and make sure that your regulation or your legislation is actually pushing us in that direction. The other part is the transmission part, which, let's face it, in Europe, it's mainly the banks that probably will need to play that role. And then the third part, and I saw in the first part of the day as well, there were suppliers there. And if you look at these different 3 things, I simplify a lot, of course, and Peter will criticize me for it, but if you look at the regulatory side, I think we're getting there. I think governments are getting there. Europe is putting that in place. We're slowly getting there, I would say. If you look at the banking part, and I don't want to speak for the banks, but after the crisis, the virtuous circle of transmission by the banks, meaning securitizations, it was mentioned before, the capital constraints, they are there. There is something that we could still do, and perhaps as public institutions or semi-public institutions, we should help there. So I mentioned the capital relief instruments. We have a traditional instrument where we also, in securitizations, we take mezzanine parts to beef up the rating of the investors, etc. We could help there. But what I see really lacking, and I'm looking at the public as well, I don't see industrial champions standing up. I don't see guys saying, this is a business model, the Johnsons of this world, you know. I don't see them standing up and say, this is, and that is where we're all struggling a little bit with. I mean, we are financiers, we could try to find solutions, and I think there is a willingness all, but I don't see these big guys standing up and saying, okay, you know, we create ESCOs, we will be suppliers of this, we take part of the benefits of the energy savings. I don't see that happening, and I must say I don't really understand why that is. And it's perhaps something we or you have to concentrate on. Why is that, and what can we do to actually trigger that?
We are working on this, I can assure you, and I think that the day here in Rome is already a big success. I'm having all of you aligned here on this panel as a sign for all of the financial actors here in the room, but it's also a message for who is not here in this room. I mean, now they left, but we had a strong presence of the Italian government here. I mean, we are filming everything. This will go at political level. Monica, I mean...
Yes, I just wanted to make a comment on this because it is like a chicken and the egg. Because, you know, I work every day in the European Alliance to Save Energy with big companies, notably. Not only big, but mostly big, which are saying exactly the same about the banks. So there is some quack there that should, and I see some of my colleagues which are sitting here, which is, I think, a very good point. So that is an important thing. I think that you need a framework. And when I'm talking about regulation, I am not only talking about regulation concerning banks. I am also talking about regulation concerning energy. Concerning the framework that pushes what somebody called the art and the feeling that we have to fight against climate change, to translate it in obligation for the public, for public authorities, for local authorities, and for everybody, really, and for companies and for business. And I think that if that there is an issue here about choosing. One of the most important and most difficult issues that here in this country are currently discussed in terms, for example, of industrial policy, is the fact that we have to be technologically neutral. You know? And I think that this is one of the most devastating concepts that you can have now. If you don't choose to go green, if you don't choose to invest in energy efficiency, renewables, you name it, then it is very difficult that this thing will happen. And that's why I was talking before about the contamination, and I think there are a lot of companies which are there, but probably the financial organizations or institutions are too shy because they are afraid not to have a market, the business somehow as well, besides some champions, and the public authorities are also locked into the necessity of winning elections, and sometimes this thing do not help to win elections. So I really think that there is this issue of contaminating, and I'm grateful to Luca for having created this occasion, is something that we really have to strive, because all those actors are there, but they have to find each other somehow.
Peter.
Absolutely agree, of course. I would like to disagree with you. But if I just, an anecdotal thing, I'm also sitting in a fund where energy efficiency fund, we only do energy efficiency direct, so we don't work through transmission systems. And what I've seen the last year, just to underbuild my case, perhaps it's too anecdotal, I don't know, but if you look at Italy and Spain, what you see there are a couple of champions standing up there for LED lighting, for public street lighting. And you see a lot of these deals coming up, and they're actually bankable deals. And we step in there because we are a semi-public-private fund. We step in there, we take a bit more risk, but the banks are coming along as well. So that's why I was thinking, in that specific niche, and again, it could be anecdotal, I see champions standing up, I see ESCOs being created, I see forfeiting arrangement being put in place, and really bank on that quick payback that you can have on energy efficiency. But the problem that public entities have to spend the euro now on something like that. And so that's why I was thinking perhaps that's where a little bit of more work, or perhaps more coordination, or bring them together. could be, because I see in those deals that the banks are participating as well, as soon as this is a creditworthy deal.
You will listen to my conclusions, and I will give you a clear roadmap in 5 minutes. We'll get in there. I would like just to give the floor to the last two institutions. I will not open the floor for questions. We had 22 speakers. We will organize a nice walk, so you have 40 minutes for all the questions, and we have a fantastic dinner afterwards, where we can have all the things. But even though I'm Italian, I try to be disciplined with time, and we are running a bit out of time, which is annoying for me. So I would like just to be concentrated, asking the two institutions to conclude, and to decide to join us for us, have the chance to raise questions. For the ones who have not decided to come for us with us dinner, no questions. I mean, Nick, can I ask you to give your view on the debate?
Thank you very much, Luca. My name is Nick Robbins from the United Nations Environment Programme. You said that the train of energy efficiency finance has left the station. My train from Bologna just arrived in Roma Termini about half an hour ago. And I've just come from Bologna, which is the host this weekend of the G7 Environment Ministers meeting. And we had a pre-meeting with Minister Galletti of the Minister of Environment, very much talking about the importance of sustainable finance. I very, very briefly want to use my 3 minutes to do three things. Just describe to you what we do at UNEP Environment, what we found, and then what we would like to do next to support this. I think in such a wonderful building as this, I have a sort of architectural metaphor for where you are. I think this is a foundational initiative, not just for the mortgage sector, but actually a foundational initiative for the broader sustainable finance area, and I hope to explain why. So, UNEP, we do two things. We work with market leaders through the Finance Initiative. Many of you are members of that. You know my colleague Annie Degen, Frank Havorka from Caisse de Dépôt is here, from the Property Working Group. These are real estate investors. But we also have been behind, as you know, the EFIG group, and Peter Sweatman has been leading that. The piece I lead with my colleague Simon Zadek in UNEP is on the policy leadership. This is a new area for us, but is working with finance ministries, finance regulators, central banks. And this, I think, it helps give some dimension and some sort of reflection on what we've been talking about here. So G20, again, Peter been working on the energy side, but again, we've been working on the Green Finance Study Group with finance ministries and central banks, the G7 I just mentioned, and also here in Italy. So over a year, we've had a national dialogue on sustainable finance. There are copies of the findings outside. And one of the priorities, an obvious one for follow-up, is energy efficiency. So that's what we do. What we found, again, no surprises, I suppose, but the things particularly that financial regulators and policymakers come up with all the time is to say, there are no definitions, there are no data. This project will deliver definitions and data. There's also a concern about market trust and integrity. This process will also deliver market trust, enable market creation. And finally, this question of financial regulation. I think many of the speakers have talked about regulatory relief and so on. Quite rightly, financial regulators are not going to give regulatory relief unless there is a risk-based reason. That is their job. Their job is to ensure the stability of banks. They're not going to give regulatory relief because it's green, and they should not. They should only give regulatory relief if it is based on the credit quality of the loans. This project has the potential to give that data. We know the hypothesis is strong from the US and elsewhere. This project has, I think, the only project I can see to give that really robust risk-based data, which will enable prudential regulators to say, yes, we can change the rules. For Peter Sweatman and I, these sort of three things come together in the notion of green tagging, that we need to have tagged loans, we need to go through market creation, and we need to think about capital relief. In many ways, I think this could be the year of green tagging, and I think your project, Luca, is very much going to be a vanguard for it. So, two things, really, just to say how we would like maybe to work with you. Peter is leading a project, really, to try and understand a bit more how banks banks could be going through around this green tagging process, and I'm sure he'd like to give you more information over dinner. Secondly, in Italy here, there will be a follow-up meeting to the National Dialogue on the 10th of July, and I'm sure one of the priorities for carrying forward will be energy efficiency. And I believe, Luca, Italy was one of your priorities here. So I think there's a lot of practical work that can be done, and this is really very, very exciting. I'm glad I got on the train.
Thank you, Nick. Tim, I mean, I would like to conclude on the European institution who is supporting us by trusting our project and giving you the opportunity to have all these people here, because without your support we could not have all these people.
Thanks, Luca. So my name is Timothée Noel. I'm working in DG Energy of the European Commission. First, as it was mentioned by Monica Frassoni, I think I would like to insist on the importance of the policy framework, which is currently being discussed together with the Council and the Parliament. The Clean Energy for All Europeans package includes a revision of the EPBD directive and of the ED directive, and we have to make sure that these framework give the right incentive and the right signal to investors. That's absolutely key. Then on the project, we very much support that project. This was already expressed by Vice President Katainen at the last meeting organized earlier this year in Brussels. We support that project because we believe it's potentially a game changer. It's potentially a game changer because it focuses on a key challenge, which is to unlock and accelerate private financing for investment in energy efficiency in our building stock. This is absolutely key if we want to benefit from all the benefits that were explained earlier in that conference and achieve our objectives. And in order to do that, we need to offer to all citizens and businesses willing to renovate their building a financial solution that can be attractive and affordable for them. And to make this happen, we need to work with the private sector, financial institution. We need to work with banks. We need to work with investors to help them understand what are the real opportunities and benefits for them in that market. We also need to work with them. We need to work together to better understand the risk behind energy efficiency investment, because like in any investment, you've got benefits and you've got risk. And that's why the work of EFIG is extremely important. As it was mentioned earlier, we're going to launch on the 22nd of June a specific appraisal underwriting guide to help financial institutions going through that process. And I know that the G20 also was there to toolkit did a lot on that. I also would like to say that we believe that this is potentially a game changer because the volume is just big. I mean, you said earlier this afternoon that the market represents 850 billion euro a year. Just compare that to what we have at the European level in terms of EU money to support energy efficiency in buildings, which is 13 billion euro over 2014-2020, over 7 years. And this is huge. It's three times more than what we used to have in the previous period. But this shows clearly that the big money is not with the public sector, with the public authorities. It's clearly with banks, it's clearly with investors. And that's why we need to use public funding in the most effective way possible. And that's why we're working as part of the Smart Finance for Smart Buildings initiative together with the EIB group to find the best model to use, for instance, EU funds. I also would like to say that this is an important project for us because mortgages are an interesting product in the sense that they can provide financing at the moment in the lifetime of a product where you can actually initiate a renovation project. And we know that the lack of access to capital is one barrier, but somehow the lack of motivation is another barrier. And if you want to have a project, you need to have financing, but you also need to have the motivation for doing some works. And with the mortgage solution, you could, in fact, attract more demand. And finally, we like in that project the fact that it's very bottom-up. It includes real banks, it includes real energy efficiency experts and companies, it includes real valuers. So we see that as an opportunity basically to go from theory to reality. It's an opportunity, like Nick Robin said, for banks to really start collecting data about the loan performance data of existing portfolio. And there are some previous portfolios that currently exist on energy efficiency. We need to move on that specific challenge. It's an opportunity for the valuers to really take on board all the good practices that exist and really try to find out how they can change their way of evaluating buildings. And it's an opportunity for energy efficiency companies to define new services that correspond to market needs and consumer needs.
Thank you, Tim. At this point, as I said, I will be brutal. I will not open the floor. I would like to conclude and try to take stock of this very intense day. First of all, I think I would like to thank the 22 speakers to guide us in this journey in these 4 hours in Rome. We have seen different perspectives. I think it was very enlightening for me. We have seen different angles and we see different solutions. To answer Peter, I think that we have a group of brave banks that are ready to step in, and there is a lot of work done in the last 2 years. We have a pilot phase with those banks are listing what are the incentives that can bring them all together, because part of them, they don't even need an incentive. They are so convinced about the project that they are ready to go. Part of them, they have to justify internally what they are doing to move the group internally in this operation. So I would like to commit here that I will gather my banks, and I think it's very important that we come to discuss with you to understand what we need to move them all together, because it will not be moving one. We need to move at least 15 banks acting in at least 3 markets in the Union, all together in the pilot phase. That's my answer to your questions. You can count on my personal commitment that we will be doing. My core business is doing compromise and solutions. That's my business. I'm a carpet seller, fundamentally. For my banks here, as I said, we have 2 phases of our pilot phase. What is a soft phase, which will last till December, March next year. I'm asking all of the banks to signal their interest to come and join this group of pioneers to find a solution as soon as possible. End of June will be our deadline. Who is in will be part of the discussion with this European institution to find a solution. It's clear, I was so scared not to find a solution today, but it's clear that there is the willingness to provide ammunition from the European institution. Now we need to show, as the financial sector, that we are ready to go. I think this conference today is the sign that we are ready to jump on the train if the condition for our banks will be economically valid. There is a demand issue. We have to combine a demand factor, maybe together with energy suppliers, we can bridge this gap. We need the technical standards, we need the regulatory support, and we need charisma and enthusiasm. We have all what we need. Now it's time to move forward, because the COP21 is not simply an agreement. It is creating compromises and moving forward. With this, I conclude. I thank all of you.